Shorts can't close their positions without causing skyrocketing price action. Closing would mean buying hundreds of millions and probably billions of shares. And even Ken Griffin is a little worried at this point as Citadel's annualized volatility spiked in 2021. But first, let's cover what hedge funds closed down and how catastrophic AMC and GameStop will actually be. Overall, guys, we got a lot of stuff to cover in today's video. Make sure to watch until the end, and if you enjoy watching or find value out of the video, hit the like button, subscribe to the channel, have post notifications on. Let's get into it. Also, guys, quick thing, I was in Boston last night for a Bruins game, came back. That's why this video is going up a little bit later, so my apologies for the delay on the video, but we are still trying to get one up for you. Anyway, let's jump into what's happening with hedge funds, banks, and how catastrophic AMC and GameStop will be. Credit Suisse didn't report any positions from February 2015 through April 2022, so more than 7 years. Now UBS is stuck with the legacy costs from both Credit Suisse and Archegos. Blackstone is closing a fund that offers investors exposure to a range of hedge funds, including Citadel, after the fund's assets fell nearly 90% in the last 4 years. What else do we have? Tiger Capital going insolvent. Melvin Capital's Gabe Plotkin admitting to losing their trade in the meme stock position for a loss and forced to close down and become a lowly family office, which yes, has less regulation. Jim Chanos' hedge fund is about to shut down after shorting AMC and Tesla. O'Day Asset Management closing down. BHS Advisors, HF shutters. Brahman Capital closes after 3 decades. Former .72 employees closing hedge fund after nearly 6 years. The list goes on and on. Citron, Candlestick, D1 Capital, Maple Lane, Light Street, all insolvent or shuttered due to their shorts on AMC and GameStop. So you get the idea. Closing shorts would be catastrophic for the entire system. They are stuck on the hamster wheel. This is why AMC and GameStop are the most suppressed stocks in the entire market, and that's why we see it time and time again. Now, what are some things that we have today? Fidelity Investments going down again for about the 4th or 5th time in the last couple of months, tweeting, "We are aware that customers are experiencing issues with Fidelity.com, Active Trader Pro, and our mobile app." So Fidelity down once again. Let me know if that worries you guys in the comments down below. Like this comment says, it's only money, right? No rush. Finally, we touched on that big deal with 999 trillion euros, or 1.5% of that, right, expiring on Quad Witching Day. And according to ChatGPT, it says it would be an astronomical event. Now, that is for the 999 trillion, but guess what? The same exact response for 9.9 trillion, which is that 1.5%. We will see what happens on December 15th. Again, probably nothing. They'll probably kick the can down the road. And we found something actually crazy with the computer share correlation to GameStop, right? DRS in your shares. We're going to talk a little bit about that in a little bit, as well as Citadel after we cover AMC's chart. A couple good things with AMC. Crossed $8 billion in the box office, so fundamental, solid, and also another order imbalance, but this was actually on the sell side on AMC, so they couldn't match the buyers. I don't know why they couldn't match the buyers, probably because they're routing all the buyers to alternate trading systems, alternate exchanges, right? Dark pools. 119,000 shares on the sell side, adding more selling pressure to the stock. AMC is up 2.78% on the day. Where are we going to go? This is what we're tracking, right? Second sell-off flush, hit the low, and then the climb. About 8 days, right? 7 days, 16 hours right here before we hit that peak that was up 24%. And if we take a look at AMC, this is my target. I'm not going to spend a lot of time on this. In 7 days, right? December 6th or December 5th, right? December 5th to the 6th. AMC will be up at $8. This is my short-term outlook if this is accurate, okay? If we're playing through another bearish cycle, which could be the possibility, $4. So by the end of the year, you're looking at $4 or $8, and it's going to tell you bullish or bearish, okay? That is my outlook on AMC. If you see a breakback above 7 and a full candle close, expect that $8 to be the target that is hit, which would be a 24% gain from the relative low, or from where we're at now would be a little bit less, right? Probably about a 20% gain from here. AMC 3.8 million shares available to borrow, call to put ratio 3,000 calls compared to 12,000 calls expiring in the money, and a lot of calls, 99,000 expiring out of the money as well, but it is a Friday. AMC will probably flush by the end of the day, and even still 4x the puts are expiring in the money, so the gamma is building to the downside. They drop a ton of short exempts on it, even when we have a little bit of green. So no, it's not ready to go just yet. GameStop trading at $15.48. Got this momentum, got this scale down, and based off of the previous cycle, I have the same thing drawn out for AMC. That way we don't have to spend a lot of time. It's up 6% on the day, trading at $15.48. Expect GameStop, by the time we hit January 9th, okay, this is my target, January 9th, GameStop at $11. Okay, right around $11 and $11.80. That's the range I expect for early January for GameStop. GameStop, 60,000 shares available to borrow. Free float locked 48%, but we're going to talk about why that may not even matter. Call to put ratio, 18,000 calls compared to basically 4,000 puts expiring in the money. Gamma ramp to the upside still on this big run we had this week, and a lot more calls being bet that are out of the money. A lot of premium went to market makers, and that is exactly what they wanted to do. Pump the stock, dump short exempts after retail purchases calls, right? Wasting your money on that premium. Look how high the short exempts are on GameStop. Never this high, ever. You go down the line, never this high, okay? Extremely high. They are dumping this thing. Now this DD has a legit SEC file, but you see the transfer agent is Computershare, and it doesn't matter because the DTC has the full custody, but it goes way deeper and more sinister than that. What is Computershare holding if the DTC has full custody? They're holding an IOU on behalf of your ownership. The DTC or DTCC is a black vault and obligation warehouse. You can see right here, DTC remains with custody and control of the shares. So does it really matter when the free float is locked? It may not even matter. We know the DTC is the same party that bailed out Robinhood as well during that squeeze with about $9.8 billion or somewhat. Now, after talking about the hedge funds that have closed down and what's happening with AMC and GameStop and how it'll correlate, let's talk about how even Ken Griffin is a little bit worried. There are these so-called pod shops, a strategy that divvies up money across dozens or even hundreds of teams that operate somewhat independently across a range of markets and strategies. These pod shops, a term often used interchangeably with multi-strategy funds or autonomous risk takers, is something that Ken Griffin previously commented on. Now, before we get into his comment, as of mid-year, there were 55 pod shops, multi-strats and single strategy, overseeing $368 billion, with about half that amount controlled by the 5 biggest firms. Now, what did Ken Griffin comment? He says, in quotes, crowded trades could lead to widespread losses if all of them head for the exits at once. And we see that the SEC officials as well as the Treasury Department have warned that the firm's favored basis trade could destabilize Treasury markets, adding that one large bank is approaching the limit of how much it's willing to lend to them. Some investors are growing more wary. So overcrowding concerns about the amount of leverage at individual firms collectively. Everyone is worried about a potential snowball effect. And it appears that despite Citadel's claim of tight risk controls and being well capitalized, CEO Ken Griffin appears to be exercising some caution in the face of declining investor interest in pod shops and fears about taking painful hits to equity. So it's not all sunshine and rainbows, as Bloomberg writes about how Citadel and multi-manager funds dominate the fund industry and how it has led to industry giants that pile into many of the same trades. Now, this is a problem because if they're counteracting, jumping into the same trades, this is where Ken Griffin's comment comes in and says crowded trades could lead to widespread losses if all of them head for the exits at the same time. So if all of these funds, all of these institutions jump in the same trade, for example, bringing up AMC and GameStop for the case, all of these funds jump into the short trade and then at the same time head for the exits, this could cause a serious problem. And Ken Griffin is now saying, now I'm getting a little worried, and you can see that in their volatility. Now, before we get into extra stuff to close out the video, SPY, Tesla, Bitcoin, and some additional information, guys, join the Discord. The link is right under the video. We're getting new members. I welcome you guys with open arms. Whether you're a beginner or advanced trader, this is a place to go. The best vibes. You can talk with me. You can request videos, post gains, post losses. Overall, it's just a place to be, and all it is one coffee a month, or you can pay for the year. There is a deal on that as well. Get in the Discord. The link is right under the video. And if you want to know more, watch the trailer. The link will take you to the trailer. Also, if you guys want up to 15 free stocks, each valued up to $2,000 per stock and 5.1% APY on your uninvested cash, use my link, sign up for Moomoo, and make a deposit. You guys will not regret it. Get those free stocks. It takes 2 minutes out of your day. One click of a button on the Moomoo link. Both under the video and pinned in the top of comments are the Discord link and the Moomoo link. Now, the S&P 500 has now traded with a daily RSI above 70 since November 20th, and you can see that right here. This is the longest daily streak of the 70 plus RSI, which means the SPY is in a very scary area, and you could expect a flash down. Now, Fed Powell today said that rate cut talks are premature, and the S&P 500 jumped to a 5-month high. Now, this is old news because it jumped higher than a 5-month high. The SPY actually hit an all-time high today. The SPY recently hit $459.55 for its all-time high, and we broke it by 10 cents, trading at $459.65 today, making a new high for the SPY. And now is the decision time. Take a look at last time we hit this, a hard flush down to that relative level right around 451. I assume you may see the same move down to 452 by the end of the day. It is a Friday. Maybe we get a catalyst. Once we see a catalyst, expect that flush down, especially since we hit that all-time high. We said once we hit this high, we either need to see a candlestick close above 460, volume pickup, and a lot of strength in the market, or you're going to see that very, very hard retracement, so watch for that. Tesla, 239.35, down 0.3% on the day. Where is this trade going? I should have taken profits on my calls, but I held through and now I'm red. And I am honestly not worried. Tesla is still looking solid, getting a slight retracement, broke back into the macro trend line, which I don't like. However, it bounced off of the 382 fib and it held that support pretty solid. There are some gap fills on the daily to the downside, right around the 220 area. If those do play out, we could see a week or two of straight red on Tesla before getting that second climb. However, I wouldn't worry too much about it. We are still in the blue range and we hit the top of the blue range, which would have been a good spot to take profits. We also hit the top of this trend line. Watch for a third test on it to get an early breakout if we do get that. Overall, the Tesla trade looking solid. If you guys are still in it with me, let me know in the comments down below. And the Tesla Cybertruck pricing now is a single motor for about 60K, dual motor 80K, and a tri-motor 100K. So their margins are a lot higher. They are a little bit more expensive. If you're getting a Cybertruck, let me know. Bitcoin broke 38,000, almost breaking up to that $40,000 level. Once we break above that, you're getting into a new range and that bull market is starting. Watch 42K for a rejection on Bitcoin. SEC spot Bitcoin ETF potential approval window is between January 5th and January 10th of 2024. So very, very soon. Finally, Argentina declines invitation to join BRICS. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to check the links, get in the Discord, the most important thing. Download Moomoo, get your free stocks, have post notifications on. I love you all. Lottery Stocks out.